Welcome.
Good, thank you. Good. Thank you very much. How many were with me yesterday? Any of you? None. Okay. Well, then I need to say greetings from Kent State University. We recently signed a partnership with your university, and so I'm the first to come over. So I don't know if that is good or bad, but it is what it is. But anyway, I'm a professor of entrepreneurship, and I write books. I lecture all over the world, and I also start my own companies. So we will be using some of those companies as examples when we talk today. Now, I want you to think about any questions you have, because I'm going to leave time at the end for you to ask any question you want. And anything is fine. You can ask about what it's like to go to school in the U.S. You can ask about what it's like to live in the U.S. You can ask, is Trump really as good as he acts like on TV? Or whatever you want, and I will try to provide an answer for you on that. When we were working yesterday's talk, we were talking about how to do business cross borders or internationally, and that is a big thing for the United States, because we obviously ship goods all over the world, and that's part of our success is to do that. We also talked about what it takes to start a company. And one of the harder things to do when you start a company is, number one, you have to have an idea for a business. Does this thing work? I don't think this is working. No, can you hear me? Okay. No, it isn't working. I know it isn't working. So, where's the thing? Yeah, is that working? Okay. We have an idea for a business. Then you have to have an entrepreneur to run the business. But a critical issue is finance. How to get money to start a business. And although we're very creative in the U.S., we're very innovative in the U.S., we're probably not any more creative or innovative than you are here in Trinopole. But what we have that is no other country in the world has is we have a very strong capital market. So the big thing for us is that we are able to provide financing for starting and growing our businesses. And I was going to talk on something else today, but I mentioned that yesterday, and several students there said they were interested in learning more about this capital markets, or how we raise capital to start a company. So I switched, and we're going to talk about today financing the venture. So if you turn to the next slide, this is a summary chart of everything you need to know about financing your company. Going across the top of the chart, you'll see three things: length of time, cost, and covenants, or what you have to give up. You remember, anytime someone gives you something, you got to give them something back, right? And that's the same way in finance. So if someone is going to give me money, then they're going to expect something in return. And that return is either some things like equity position in the company, which means they have ownership, or they're going to loan me money, and then I have to pay them back that money plus an interest rate for them to return their money, plus cash for giving me the money to use. So everything is very simple in terms of finance. For those of you that are taking finance, it's really not as difficult as you may think on the first course, because it's very logical. So if you go across the top, we have three things we have to worry about. One, how long do we get the money? Obviously, how long would you want to get the money? Forever, right? So the ideal money means I get this money forever. We also have to worry about how much it's going to cost us. And the cost is in terms of how much equity, how much ownership we have to give in our company to the person giving us the money, or how much interest rate we have to pay. How many of you have borrowed money? Any of you? From your parents, maybe? And they said, oh, here, I will give you some money, but you have to pay me back that money plus something more. So we worry about the interest rates. And the third thing we worry about is, on the other thing, is how much control. What do we have to give up to this person in terms of voting rights or whatever that may whatever they want to have. So those are the three issues in every money transaction going across the top. Length of time, cost, and control. So going down the left hand, and ideal money is this. I get the money forever. I never have to pay it back. It costs me nothing. And I give up nothing. So that's ideal money. And you have to promise me, since I came all the way from the United States, that if you ever find that money in Ukraine, you need to email me, because I'm going to come over and get as much of that money as I can, because that's just not going to be available. So I have to give up something. But that's how you start thinking about when you're looking at raising capital to start your company. Now, going down the left-hand side of this chart, you'll see various sources of money that you can get. And the first item on that is self. And one of the things you remember as entrepreneurs, we have to put some money into the company. Now, we like to put as least money as we can because it's risks. This is very high-risk business, but we have to put up some money because that's called commitment. And without commitment, nobody else is going to put money in, are they? So if you go talk about a good idea and everybody says, oh, that's really great, and you said, yes, give me all your money and I'm not putting anything in, they're going to say, well, why aren't you, if you think it's such a good idea? So you have to have yourself go into the company. That's what's very hard for students and sometimes faculty to start companies, because they don't have a lot of money to start it with. But when you're a student or a faculty member in the States, you're looked at a little differently, and you don't have to have as much money in the company. The second thing down there you'll see is family and friends. And family and friends always come to your rescue, and particularly grandmothers. So if you have a very wealthy grandmother, you're very fortunate, because they always believe in you far more than they should, don't they? And so if you have a wealthy grandmother and she is looking to adopt a son, I'm it, because I don't have a wealthy grandmother. So that's the second thing you want to remember. So you owe me if you find this free money, and if you find a grandmother for me that has a lot of money, of course. There is a criteria for the grandmother. But they also believe in you, and so they're willing to put their money into your company. So that's two of the biggest sources of funds we have. Family and friends and your own money. The third thing is a new thing. As how many of you have heard of crowdfunding? You heard of that yet? It's a really interesting concept that's only been out for about 3 or 4 years. It was started in the UK, but then the United States took it over, and we really understand capital. That's the one asset the US understands: money. Moving money, investing money. And that's what we do really, really well. So I'm going over and what is crowdfunding for you in just a minute. The next one is commercial suppliers and trade credit. Sometimes, in some situations, you can get your people who supply you with this stuff to make your product to loan you money or invest in you. And sometimes the people who you sell through, your retailers and wholesalers, if you're not an industrial product, they will actually invest in your company. The fourth thing is commercial banks. And the commercial banks play a very important role because they lend money. Banks are lenders of money, and that's the role they play in a financial system. So our banks are very, very big on loaning money to startup companies like mine, or to other bigger companies, which is less risky. So if I loan money to my company, like Spectre Sports, which we just started in Slovakia, that's more risk than if they loan money to IBM or Google or Facebook or one of the other, Amazon, some of the companies like that. So they have to charge me a higher interest rate, but banks are very important for us. Now the next one is something that is really why the US is so strong. It's not that we're any more innovative, it's not that we're any more creative, it's not that we're any better at starting companies, it's these private individuals. They're called angels. Now don't kid yourself that you think these are angelic beings. These are very, very smart investors, but who have made a lot of money. And the criteria for an angel varies by country. And so these angels are private individuals who invest back in startup companies in an economy. And that's very important for an economy to have these people, because they're the ones that really fund the startup companies and the companies in the United States. And we have a lot of angels throughout the United States. These are people who either make $200,000 a year or more in income, and or have $1 million of wealth. You have these kind of people here in Ukraine, don't you? People that have been very successful, that have made a lot of money. And the key then to the Ukrainian economy literally is, how do I get these people to invest back in startup companies to make jobs and grow and create a lot of opportunities for other people? And that's something that doesn't happen very often in a lot of countries. And that's one of the nice things that we have in the U.S. And we'll look at what they do and how we approach them. After the angels, we have other things is like venture capital. And venture capital is something that was started in the U.S. There's venture capital firms. You have them here in Ukraine, particularly in Kiev. I know there's a couple of them that are tied to U.S. venture capital companies. And these give big sums of money. And then the last three are private equity placements, which we're not really going to talk about. Public equity offerings. This means your company becomes a stock company. Two of my companies are listed on the NASDAQ stock exchange. And each area has a stock exchange. Your closest big exchange is in Frankfurt, Germany. Austria, Vienna has a little exchange, but not very big. But the Frankfurt Stock Exchange, the London Stock Exchange, the three stock exchanges in the U.S., which is New York, American, and NASDAQ. And then, of course, Singapore has a big stock exchange, as does Tokyo. So we have big stock exchanges all over the world that you can list your stock, list your company, and then you hope the price of your stock goes what? Up. And that's what you really want to do. So as your stock goes up, then you make more and more money. Like Zuckerman, who started Facebook. How many of you are on Facebook? Yeah, I'm not. Believe it or not, yes, I do have an account. I just don't ever look at it. But he, for a long period of time, was just using, he wasn't a publicly traded company. They went public, and now you can buy stock in Facebook if you want. It's listed on the NASDAQ stock exchange. The last two things are government programs and private equity funds, and we'll briefly talk on those. So that one chart is all you need to know about sources of capital and what you look for. Remember, you want the money for as long as you can get it. You want to pay as little as you can. And you don't want any long-term commitments that you have to honor for a long period of time. And now you can trade off how you want to raise your capital for a company. And one of the things you want to remember is you have a lot of Ukrainians. In fact, we have a very strong Ukrainian group in Cleveland, and that's why we have a relationship with you all and why I'm here now. And a lot of those Ukrainian people who have made very good money in the United States are willing to invest back into the country. So maybe you should look at some of that if you have an idea for a company. So the next slide we talk about is loans. Now you remember we talked about two kinds of capital. That's all there is in the world. Debt and equity. Remember that? Debt and equity. So if you have debt financing, that means you borrow money. When you borrow money, you have to pay it back, unless you have a wealthy grandmother, which any of you have. Remember, you're thinking about me being adopted. So you have to pay the money back, and that means you pay back the principal, the amount of money you borrow, plus interest. And this is where some companies get into big trouble. Because if you do not pay your interest to the bank or to some other organization, then you may not be able to continue in business. So you have to be careful of the amount of debt you carry. And the more debt you have on in your company, the more you are what we call leveraging your company, or putting the company at risk. And you want to be careful of not to put your company at too much risk, because personally, I don't like to fail. And you don't either, because then you lose all your money, and that's not any fun. So you're careful on how much debt you carry, because that is the riskiest capital that we have. But banks lend based on character, based on capacity, how much money you want, how much capital you're going to raise totally, what kind of collateral, what kind of assets you have to back up that loan, and finally, what are the conditions of the loan and the conditions of the economy. Right now, the U.S. is very, very, very strong. We literally have not been this strong probably in the last 20 years. Our economy is just unbelievable. We have very little unemployment. We have a lot of capital available. And it's just really a great time to be into business in the U.S. So that economy then, in our conditions for us in lending money, banks are very willing to. They say, oh yes, we'll be glad to lend you money at X interest rate. And the interest rates, because our inflation is below zero, we can't even get our inflation up. And because our inflation is below zero, our interest rates are, at one time it was 0%. I mean, I don't even have to pay any interest. They just give me the money. And now it's 1.2%. Well, this is free money, basically, because 1% interest rate is nothing. I don't know what the interest rate is here in Ukraine. Do you know what it is? 6, 5, probably? 5 to 7, that's what I thought. So I'm not too far off. So you have to pay 5% interest rate. I pay no interest rate. That's sort of nice, isn't it? That's like you going to your parents and say, listen, I want to buy a car. Can I have my money and I'll just pay you back the loan, but I'm not going to pay you anything for using your money. And your parents says, sure. And that's what the banks are doing now in the United States. So I like it very much. So we have a lot of companies form in the U.S. right now at a very high rate. The problem is that high rate and a lot of companies form means what's going to happen. A lot of companies are going to fail. And that's what the U.S. does. We create a lot of companies, and in the first 5 years of that business, chances are the company, 80% of the companies will no longer be in existence. So you're taking a risk as an entrepreneur. But if you have an idea that you really think is good, you really love, you're passionate about it like I get, very passionate about starting companies, then you're willing to take the risk because you believe this idea is so good, everybody wants it. So right now, it's very good to borrow money in the United States. We have a lot of types of bank loans, but we won't go into that here. But the main bank loan you're going to want to have is an equity loan, or the accounts receivable loans you do when you grow your company. So that means that you sell to someone and that company has the cost of the goods to you, but you haven't been paid yet. So those are those kinds of loans. And we also have equipment loans, long-term loans, etc. So there's all kinds of loans, which is a whole course in itself, banking, the banking system. So that's what banks do, and that's at commercial banks, that third line down. They provide debt capital. And as your economy gets stronger and stronger and gets known in the world, your banks are going to be more and more active. Just like I was living in Budapest in 1989, and that's the year that the wall came down, and the banks in Budapest didn't know how to loan money. So they had to be trained on how to do loans to businesses, how to evaluate them, how to make sure terms of closure are right, what kind of banking laws there should be, what kind of contracts there should be. And now Hungary has a fairly good banking system for Hungary. So you're going to see the same thing change here. That's the beauty of what you have, a lot of things to look forward to, even though right now it may not be as nice as you would like it to be. So that's the banks, and they play a very significant role. So if we go to the next slide, what I now have laid out for you is, this is another slide. Can they get these slides? No. Can they get a copy of these slides? Can the student get a copy of these? Not. Okay. Otherwise, you can have it. If you want a copy of these slides, then you just email me. I'll send them to you myself. All right? Because one of my assistants will. So what we have here is, this is the whole, what we call the enterprise capital private equity market. And you probably will not have much talk about that here. And this is the market for private firms. Now, if you're a public firm like IBM or Google or Amazon or Zetatech, one of my companies, or Jameson Inns, which is one of my companies, we have access to public capital because we're a publicly traded company. And when you become publicly traded, that means you have all other kinds of rules and regulations you have to follow. But for private firms, which is the largest percentage of firms in the world, are privately held companies, this is their capital market, not the stock market. So there's three types of private capital firms. The first one is on the individual side. The second one is venture capital. The third one is your private equity firms. Now, what happens as you move from left to right is there's more number of deals done is higher on the left-hand side, but the amount of money is bigger on the right-hand side. So, for example, the United States, we had a company called Chrysler. We sold Chrysler to the Germans. That was a very smart move on our part, because Chrysler was not a very strong automobile company. But the Germans were smart enough to sell it back to us. So now it's back as a US company. So we have Chrysler. Well, Chrysler isn't owned by stock, it's owned by a private equity firm. The private equity firm is KKR, which is one of the biggest in the world. They bought the whole company. So that's a lot of money. So that's where the big capital is on the right-hand side, private equity firms. So now let's go and look at these, what we have here on the left-hand side. Number two, and one thing I want to talk about is crowdfunding. And so let's go to crowdfunding sites. And you should do write some of these down, or if you want, email me and I'll send you all these sites. These are ways you can raise money by the internet. That's really crazy, isn't it? Raising money by the internet. So let's say you have a great idea and you want to raise capital. So what you do is you go on the internet and you choose the right site, because you can raise capital in one of three ways through the crowdfunding. Number one, you can give up ownership. That's a standard transaction. So I give you so much money, and for that I get so much ownership, so much stock, so much shares, percent, doesn't matter, it's all the same in my company. I'd rather not do that, because I want to keep all the ownership, don't I? Because then when I'm successful, I make a lot of money. But you have to give up ownership. Or number two, some people want to have the first products. So you say, if you invest so much money, as soon as I make the first one of these, you will get it. And they like that. They're what we call leaders of that particular kind of product. And people like to be proud of that. Remember when you bought your first nice clothes outfit, or your first stereo, or whatever it might be, you were very proud of this, and you really like to show it off. So that's another kind of crowdfunding site. And the third kind is something that appeals to people's ego. And we all have a certain amount of ego, or liking our name out. And since none of you were here yesterday, I'll just share a story with one of my students. He was very, very smart. He had his CPA, which means he was a certified public accountant. He was getting his MBA degree from a previous university of mine, Thunderbird Graduate School of Management. And he said, I want to create a movie, a documentary movie. Now, this is really one of the craziest things you ever want to do, but that you produce something that's on in the movie theater. But documentary movies aren't like you go to your movie and see a big screen and some great actors. These are more things that are focused on certain kinds of activities. And he had been down in Brazil and was on an island in Brazil, and he met a man there who loved monkeys. He was the only person on the island, small little island off of Brazil, and so he was the monkey man. And he said, I want to produce a movie for the monkey man, on the monkey man. I said, you are absolutely crazy. You got everything going for you. You got your CPA, you got your MBA, you got an idea for a business, and you want to take time out to produce this movie on a man that nobody cares about. Oh yeah, he wanted to do that. So I said, well, where are you going to get the money? Oh, that's another story. See, it's always about the money, isn't it? And so I said, well, why don't we try to raise it by the crowdfunding. So what we did is, if you remember the last movie, how many of you have gone to a movie in the last month, gone into the movie theater? Or you actually downloaded a movie, probably illegally, which we all do. But anyway, and you remember at the end of the movie when you're trying to leave and you forgot something, and so you're sitting there and all these credits come up? You know, the producer and the director and the costume artist and all these silly names come up. Well, those are credits. And so he said, well, I said, well, we'll give credit and people can put their name on the movie. And the more money you get, the bigger your name is in print. So this was sort of fun. So if you gave a little money like this, your name you had to use a magnifying glass to see your name, but it was there. If you gave more money, then it got bigger. More money got bigger. If you get a lot of money, it was really big. And he said, I need $270,000. And so we're going to raise money for people probably never ever heard of the monkey man, probably don't even care about the monkey man, but they got what? Their name on a movie, right? So, boom, we went out on the crowd through the internet, and you know how much we ended up raising? 400, I can't remember whether it was some came in late. It was 450, but I think we ended up with $480,000. We only needed $250,000. So this was really nice. All because people wanted to say, I helped produce a movie, right? So that's what you can do too. So each crowdfunding site here has a different output of what you want to have. And so GoFundMe, YouCaring, Donor's Choice, Honey Fund, these are personal fundraising sites where you have an idea and they get first product. You can go to the next slide. Some of Facebook, Just Giving, Generosity, Friendly, these are other crowdfunding sites. The big ones down here are project-based funding sites. Kickstart, that's one of the biggest ones in the US. Kickstarter, Indigo is another big one, EquityNet, Patreon, they go on and on and on. So there's plenty of crowdfunding sites. So promise me, when you get finished with this class, and before you go do whatever you do socially, just take some time and go to one of these crowdfunding sites and see what it's like. It's really incredible. And they're all over the world, not just in the United States. You can access them through Germany. I don't know if you can access them here, but you can, so try one. So if you got an idea and you have want to find out a little bit more about it, one of my PhD students is now doing research on what makes a good crowdfunding site and what makes a good crowdfunding campaign. There's things like color, there's how big the print is and all this kind of stuff. So I'm learning a lot about crowdfunding through her research, and I'll help you get on a crowdfunding site. So you can raise capital and be one of the first in Ternopil to be funded by crowdfunding, if it's legal here in Ukraine, which I don't think they can do anything about it. Okay, so let's go back to the first slide. So that's crowdfunding. And it's really, it's going to make a huge difference in people all over the world because capital now is available by anyone. So this crowdfunding, I could get money from China, from a person in China. I could get it from somebody in Ukraine. I could get it from somebody in Slovenia, somebody in Germany, plus everybody in the US. So back to the first. Now, so we did crowdfunding more. Okay, so what we want to talk about now are angels. Angels. And so turn to the next the chart. What we call informal investors. And this is something that now is all over the world. I have a feeling that there's probably an angel group in Kiev. I don't know, I haven't been to Kiev in about 7 years, but I used to go there every year when I was at another university. And but they're a big enough city to have this. And what an angel is a very high net worth, which means a person who has a lot of money. And there are criteria by country that differs. So in the US, that's $200,000 a year or more in income and or $1 million of assets. That makes them what we call a accredited investor. They should be smart enough when they make that kind of money to be able to invest in anything, and they can handle the risk. Because remember, the chances are of your being successful are not very high. 80% of the companies that start in the US are no longer owned by the same person, are even in existence after 5 years. So that means a lot of these companies have failed. And so these investors lose a lot of money, but then they had one big hit. Like just think if you invested in Facebook when Zuckerman had his idea at Harvard. And you invested in that company then, how much would you be worth today? Probably, depending on how much you invested, somewhere around $1 million. So you only need one big hit like this, and you're very, very happy. So maybe you are the one that's going to do that, and that's what's always exciting. How many of you want to be an entrepreneur? Any of you? Any of you want to start a business? Want to be your own boss? Want to be independent? Yeah, right? It's fun. I love it. It's a lot of work, a lot of risk, but it's your company. And there's something about saying, I did that. You had that idea, you went through all that trouble, and there's your company operating, selling goods and services. That's really exciting. So these angels, these private individuals, they have a problem finding deals. So could you think of someone like, let's say, Zuckerman. Zuckerman invests privately too, besides running his own company. So he puts out a sign, I'm an angel investor, come see me. You're going to have all kinds of people come that you don't want to see. So they need a way to find deal flow. And that's what's happened now in the US and all over the world. We call them angel groups or angel networks. And these are all listed all over the world. So if you go, you can find them in Ireland, you can find them in the UK, you can find them in Germany, you can find them in Austria. I'm almost positive there has to be one in Ukraine. You can find them in Russia, you can find them even in China. You can find them all over the world. And that means these people get together on a regular basis to look at business opportunities to invest in. That's basically what they do. So let me show you what a typical angel group does. So if you go back to the, back up, well, back there. A typical angel group is one like I formed at Thunderbird Graduate School of Management. So if it's an angel group, we call ourselves TAN, Thunderbird Angel Network. Isn't that clever? No, it isn't clever, but it's what we call ourselves. So we meet 6 times a year. 6 times a year. Each meeting is exactly the same. So people come and register. If they want to come a little early, they can have a beverage of choice. And then a little social time with other people. Then they get fed a dinner. They have to pay $1,500 to be a member, by the way. They get a nice dinner. And then the real program, or the real meat of the program, starts at 6:30. So we look at 4 companies per time. So that means throughout 1 year, we look at 24 companies, right? 4 times 6 equals 24. Now, at the last angel meeting, I didn't attend because I was somewhere. But anyway, they had 87 companies apply that wanted to show us what they had. 87 companies. So these 87, we have a screening committee, which I'm on. were screened down to 10 companies. And the 10 companies then had to send us what their presentation was going to be. And so they had to send us the slides and what they were going to talk about in their 12 minutes. Very tight run angel meetings. 12 minutes, that's all you have to tell someone enough about your company to get them interested to think about investing. That's a lot of pressure on 12 minutes, isn't it? So any of you that haven't had that experience in making short presentations and having things very succinct, you want to get that, you want to have that capability. It's very easy to write a big paper for a professor that you know he's not going to read very carefully. So what do? You make sure your first part of your paper is good and your last part of your paper is good, and the middle part is only average. But if you only have 12 minutes, you only have so many PowerPoints, and you usually count on a PowerPoint per minute. That's 12 slides. That's all you got. You're very careful on what you present. So they have 12 minutes to do the presentation. So the meeting starts, and the first thing, we call up the first company. The first company, it has 12 minutes. 12 minutes are done. I don't care where they are in the presentation. They're finished. That's their time. And then we have a question and answer period for 10 minutes from the investors. You can ask them questions. And then we have a student team come in. So this would be a good thing for students to learn. And they do what we call initial due diligence. So they said they've researched the company, here's their findings. And they're always asked, would you invest in this company or not? Now, and the students have to say. Most of the time it's no, because they're not risk takers. But we then take that into account, and then the next company comes in. Same thing. 12 minutes, question and answer, student presentation, next company, 4 companies. At the end of the night, we then said, how many people are interested in looking more at company 1? And if any of the investors are interested, then we form an investment team to go look at the company more carefully. If nobody's interested, then that company's out. And so out of the 10 companies that or the 4 companies that presented at the last meeting, 2 of them were interesting to people. So that means we're now doing more work on 2 companies to see if we want to invest. And usually the range of investments of these angel groups are anywhere between, that's a little low, average investment now is about $250,000, anywhere between $100,000 and $500,000. So this is smaller amounts of money at startup or seed capital, the hardest capital to raise. So these angel groups are all over. So if you ever want to look at that, you go to this website, Kaufman, KAUFMAN.org. That's the KaufmanFoundation.org, and every angel group anywhere in the world is listed. And you go to Arizona in the United States, and you'll see Thunderbird Angel Network, because we're still very, very active angel group. So that's what angel groups do. They look at various deals and then decide whether or not they want to invest. And it makes it easier for the people who have money to get together, have a little social, have a beverage, have a little food, and then they're able to decide what they want to invest in. And so this is sort of the investment record. What are these people like? They're really well educated. They'll finance firms anywhere in the world. We actually do a lot of our financing because Thunderbird is an international school. We do a lot of financing in Singapore, in Germany. And so maybe we should look at some deals from Ukraine. Why not? And firms financed usually within 1 day's travel, but with the airlines today, it can be anywhere in the world. And they like to play an active role in the company. So you have them on your board of advisors. And so that's what angel funding is all about. So you should read about this, because if it's not in Ukraine today, it will be, I will guarantee you. And whether or not it's going to be here in Trinopil, I know it will be in Kiev because it's a big enough city. And hopefully you'll have an angel group here. And hopefully some of you can present to them. And hopefully some of you will get funding. And hopefully some of you will be very successful. And then I can come to you and ask you to fund my companies. And that's what this is all about. It's full circle. Okay, so that's the informal angel network, and that's the powerfulness of the United States. We have hundreds and hundreds of these groups all over the United States, and that's what drives the U.S. economy. The startup networks, the startup companies get their money mostly from private individuals in the U.S. And that's why we can start so many companies, because we have a lot of people with a lot of money, and they want to invest in other companies because they want to increase their what? Their own personal wealth. Okay, now the next tranche of, let's go back to that slide, is venture capital. Now, how many have heard the term venture capital? Any of you? Really? Surely you have. No? Okay. Well, venture capital is that next group of firm, remember that next group. And venture capital invests more money. They tend not to be at the startup of companies. They tend to be in the range of $1 million to up to maybe $20 million. Now, this is all U.S. numbers. It would obviously be less here in Ukraine. It's less in the UK. It's less in Ireland. Germany, it's about the same. But they do that next round of funding. And it's anywhere from $1 million to $20 million. Sometimes up to 100 million. And these are formal firms, venture capital firms. And so they go out and raise money from pension funds and from wealthy individuals. Some are listed on stock exchange. And then they use that money to invest in companies, what we call the second round of financing. And there's a lot of different venture capital funds, as you can see going across the board. These are venture capital companies. The first one is the biggest, private venture capital firms. And so these are run by several individuals who then get private investors to come in and put their money in, and then they do the investment decision. And these are the large funds that we have in the US. And most of these, when they do international deals, they'll co-invest with some firm in that particular country, in Germany, UK, Ireland, China, Singapore, wherever it might be. And they do limited, they have limited partners. The next deal, kind of investment venture capital firm in the US is small business investment companies. These are smaller in size. Whereas the private venture capital firm will maybe have a minimum investment of $3 million. The small business investment company may have a minimum investment of $700,000. So much smaller in size and much broader portfolios. Now, what happens in the industry-sponsored venture capital firms is the bottom one, which is very important. So large corporations all have venture capital funds in their company. And these venture capital funds invest in other companies that they are in their focus area, or they invest in their own individuals. That's what we call corporate entrepreneurship. So you work for a large company like Siemens, like IBM, like Unilever, Procter & Gamble, Google, Facebook, whatever it might be. They're doing investments outside the company and inside the company because they need to what? Continually have new products and services in order to stay in business. Those are very, very good non-financial companies, are very good investment vehicles. We have those that are regionally oriented. So Germany, for example, they have a Northern German fund. So if you're not in Northern Germany, you can't get any money from them because it's location specific. Vienna has a Vienna fund. So if you're not locating your company in the city of Vienna, you can't get any money there because they only invest in companies that are located in Vienna. So you'll have those as your economy continues to become market-oriented. We have university-sponsored funds. And now what's happening in the United States, and hopefully it'll start happening in Europe, it hasn't yet. I've been working on Slovenia. I'm on the faculty of the University of Ljubljana, so I go to Slovenia every year, is the university has its own funds. So what does a university have? All we have is what? We have talent, we have students, we have professors, and we have ideas. So why shouldn't the universities have a fund to invest in that? And so you have the biggest university fund is Stanford Venture Fund. So if you want to email or look at that, you can. MIT is the second biggest, Massachusetts Institute of Technology, where I used to teach. They have their own fund. Carnegie Mellon, Harvard, Yale, Princeton, University of Texas, et cetera, all have their own venture capital funds to invest in students, faculty, and alumni of that particular university. And then finally, we have these philanthropic funds, which are just starting, and they're so crazy, I don't even need to talk to you about them because they're not going to make it. But anyway, they have those kind of venture capital funds. So that's the venture capital industry. They have focused investing, they have larger money, they're on the second stage financing, and that takes you to the third stage financing, which is your exit strategy. You remember, people start businesses. I start businesses to sell them. Now, how do I exit my company? I exit my company by selling to somebody else or to a private equity firm, and then that money pays back the people that invested in me. Or I go public. Those are the two exit strategies you have. Selling to someone else, keeping the company going, or going public, becoming a publicly traded company, like Zeta Tech, like Jameson is. So that's where we exit the firm, and therefore we pay back our investors, we make a lot of money, and everybody's happy. So that's what the private equity market is. For private firms, we have these various troughs: individuals, which includes crowdfunding, venture capital, which is the second one, and then private equity firms, which is the third one. And as the number of deals are greater on the left side, the amount of money into the company is greater on the right side, and that's what we call the private equity market, or the market for privately held firms. Does that make sense? You with me? No? Yes? Okay, that's good. So that's what funding your business is. I'll close with one example. So I had a company, we sold it now. Yeah, we were in the apps business. Now you probably don't remember when apps started, Apple started apps, and they had a rule that said anytime we take one of your apps in our domain, and people pay money for it, we get 20%, you get 80%. And that rule holds all over now. They sort of set the standard for apps. Well, we decided that one app that how many of you like birds? You know, the things that fly around in the sky? Any of you like birds? Nobody likes a bird? I don't like birds either. But there's people that we call bird watchers. You know anybody that watches for birds? You know, they get all excited, they see this bird fly by. Oh, look at that bird. You know, they're sort of crazy people, but that's all right. So anyway, the first thing they want to know when they see a bird is what? What's the bird? Now, you know, you can't carry one of these big heavy books around if you're walking around, you know, walking or hiking or whatever you do. So now they have an app, Birds of North America. And that's our first app. So we had to raise some capital to start this company. So we started the company by having family and friends and founders. So I was a founding member of this company. I was not the president and CEO, but I put some money in the company because I thought, we have 10 million people in the United States, 10 million people who tell the world they're a bird watcher. Well, that means there's probably another 10 million people that are afraid to say that. So we got a big market, 20 million people, that's a big market. So I thought, yeah, this is going to succeed. So we started the money and we started the company with $325,000 of capital from family and friends and founders. So it was all private individuals. So, and we were on Apple. I think we were the 50th app ever on Apple, Birds of North America. So, and the company's called Green Mountain Digital. Why Green Mountain Digital, I'll never know. But anyway, it doesn't matter, that's where we were. And we were up in the mountains of Vermont. That's a little state way up in the north part of the United States on the right-hand side of the country. So we wanted to, then Android came along. And that changes the world. And so we were only able to offer to Apple. Now, I thought, in my naivety, that if I wanted to change over to Android system, that's easy. You know, I just push a button and it changes over. Not true. You got to reprogram everything. That's very expensive. So we raised another $650,000 to change over to Android and to start marketing our app more aggressively and to create a second and third round of apps. Then we went for the camping market. How many of you camp? Any of you like to sleep outside? Throw out a tent and, you know, do that? I don't, but I like to call room service. But anyway, we have big campers in the US. So we thought that's a great market. So we did Campsites app. And so we needed more money, so we raised that money. So now, first round of capital is for family, friends, and founders. Second round of capital was from private angels, investors. So then we went to the third stage, and now we really wanted to grow our company faster. We wanted to be able to create a lot of apps. We wanted to create apps for individual companies, those kinds of things. So the third round of capital was $2.5 million, and now we went in, venture capital came into the company. So you see, as you grow your company, as your company continues to get stronger, you go switch where you get your capital from. And now Green Mountain Digital, we sold it to another company. And so I no longer have to worry. I got my money out plus a nice return. And everybody's really happy because it was a successful company and launch. And so that's what happens day in and day out in the United States. People raising capital at one stage, people raising capital at another stage, people raising capital at a third stage. And I'm just very thankful, even though I love coming to your country, your hospitality here has been absolutely phenomenal. I couldn't believe it. As we were talking last night over dinner, I don't think I've ever felt so warm a welcome by faculty and staff and students in my life at any university anywhere in the world. And but I love going back to the US because we really understand capital markets. We really understand economics. And right now, the US economy is as strong as it's ever been in my history. And it's not going to, we truly believe we're going to be that strong 2 years from today. So we look at another 2 years of really, really strong economics. So that's my presentation. I'll close with one story. And I think I'll just close with a story about 3 entrepreneurs. Now, I told the story of 3 entrepreneurs, and they were marooned on an island yesterday, and then they got picked up off the island, so they were all in jail. So one entrepreneur was from the United States, one entrepreneur was from Ukraine, and one entrepreneur was from Russia. And so they went up in front of the courts. They were jailed, put in jail because they were trespassing on this island. And the judge said, well, the law is very clear. It was a French court. And he said, the law is very clear. Anyone who violates and trespasses on that kind of island, that's French territory, you have to be killed. You have to be shot. So the first entrepreneur went out, and it was the American, and the judge, the person there who was going to do the execution said, how do you want to die, by the guillotine or by the gun? And he said, well, I'm in France. If I'm in France, I might as well die the French way, so I'll die by the guillotine. So he put his head down, and the guard pulled and pulled and pulled on the guillotine. The guillotine didn't work. And the laws in France are very clear on this. If the guillotine doesn't work, you're free to go. So he walked back and said, well, this is a great deal. I don't have anything to worry about. Walked back, and the Ukrainian entrepreneur came out, and he said to the Ukrainian entrepreneur, the guillotine doesn't work. So the Ukrainian entrepreneur got out, and the person said, which way do you want to die, by the gun or by the guillotine? He said, oh, the guillotine. Put his head on the guillotine, the guard pulled and pulled. Guillotine still didn't work. The Ukrainian entrepreneur was free. So he's walking back, and the Russian entrepreneur comes up, and he says, the guillotine doesn't work. So the Russian entrepreneur goes up, and the person said, which way? And before he could even ask him the question, he said, I know, the guillotine doesn't work. And of course, he was shot by the gun. So anyway, those 3 entrepreneurs, 2 are okay, they're doing well. The other one is obviously dead somewhere in France.